What's going on, guys, and welcome back to another video. So in today's video we're going to discuss the adjustments that I'm going to be making to all three of my portfolio pies on Trading 212. But before I get into today's video, if you're new around here, please consider subscribing to this channel, as it would really help this channel out going forward. So with that being said, let's get right into today's video. So here we are on my Trading 212 portfolio. Overall, as you can see up the top left, I have €2,715 invested, and the portfolio value is currently worth €2,647, which results in negative €68.17, or just under 2.5% in the red. And this 2.5% in the red, I am not one bit concerned whatsoever with this, as the whole market as an overall has been going down the last week or two. And in my eyes, that's definitely a sign to even buy more once the market goes down, as I can improve my dollar cost averaging for my shares. Like, people believe that if your account goes into the red, they start to panic and sell straight away. But you have to realize that the market is cyclical, so it's going to go up as well as down. But over time, if you're a long-term investor, it will start to will have higher lows and higher highs over time. So keep sticking at it. And again, as I said, and I'll be doing this myself this week, since the market has dropped, I'll be buying even more. So as I said at the beginning of this video, I'll be making adjustments to each of my three portfolios. So I have my dividend portfolio, my ETF portfolio, and my growth portfolio. And starting with the ETF portfolio, I will not be adding any additional ETFs into this at the moment. So as you can see here in the holdings, I just have the Vanguard S&P500, and as an overview, I currently have $511 invested. It is currently down just under 1%, or €4.90. So in this case, I'm going to be dollar cost averaging and adding in a further, let's say, 100 or even €200 into this ETF, again, to bring down my average cost. The second portfolio is the growth portfolio, and I currently have 6 positions in this pie. The overall portfolio is worth about €1,062 at present. It is currently down €41, or 3.78%. And again, as this is a growth portfolio, this will be a lot more volatile than, let's say, the ETF pie. So it could be down 5% one day, but it could be up 5% the next. And at the moment, as you can see here, we currently have 6 holdings. So we have Amazon, Apple, Facebook, Alphabet Class A, Microsoft, and Tesla. And you can see the weightings. So currently I have 20% allocated to Amazon, 20 to Apple, 20 to Facebook, 20 to Alphabet, 15 to Microsoft, and 5 to Tesla. Now, in my plan going forward, I want to get this portfolio up to 10 companies. And I'm going to obviously alter the weightings according to that then. So I'm going to be reducing the weightings for, let's say, Amazon, Apple, Facebook, and Alphabet. And I'm going to be adding in 4 more companies. Now, I still am yet to fully determine what these 4 companies are, but I was thinking maybe Visa will be one of these. I might also add a small weighting, maybe 1 or 2%, to a company, Workhorse, that I've talked about in prior videos, which is an electric vehicle sector company. But as I said, I'm not fully finalized yet with the 4 companies. And when I have these added, I will clarify which these 4 companies are and what the weightings I will be using in this portfolio once there is 10 companies here instead of 6. And my third portfolio pie that I have on Trading 212 is my dividend portfolio. Currently, as we can see here, I have 20 holdings in this portfolio as of now. The current value is €1,078. I'm currently down about €21, or just under 2%. And again, as this is a diversified dividend portfolio, this tracks the ETF as such, or the overall market. And because that has been down quite a few percent in the last week or two, this dividend portfolio will also be down a few percent. So again, I know it might sound weird, but sometimes I prefer when I see the red numbers here, because it means I actually can invest more in the company to dollar cost down. So there's 20 companies here, as I said, and they are Johnson & Johnson, Coca-Cola, PepsiCo, AbbVie, Procter & Gamble, Pfizer, JP Morgan & Chase, Bank of America, Goldman Sachs, Walt Disney, McDonald's, Target, Walmart, Realty Income, 3M, AT&T, Caterpillar, Waste Management, and then my two energy ones, ExxonMobil and Chevron. So you can see it's quite diversified. So in terms of making adjustments to my dividend portfolio, I'm still a bit undecided in terms of this, but what I'm thinking of doing to this portfolio is actually, because there's 20 companies here, I'm thinking of cutting it down by 50% and having 10 best dividend overall diversified companies that I can come up with in this portfolio. I can then further have a lot more invested, double the amount in fact, invested into each of these 10 companies. And when I made this portfolio at the beginning, I didn't really have an ETF as such, and now I do in the form of an S&P 500. So I am kind of diversified fully across the board by having that in my overall portfolio, the S&P 500. So because of that, I was thinking of cutting down the dividend portfolio to the 10 best dividend companies, such as Coca-Cola, for example. And then that way, I'll have my fully diversified in the ETF portfolio, as that would be the top 500 companies in the US. I will then eventually have 10 of the best growth companies in my growth portfolio, and then I'd also have 10 companies in the dividend portfolio. So that's just my thought process going forward for the next few months at least anyway. So again, just an overview of what I went through in today's video. So first of all, we went into the ETF portfolio, and I said that I'm going to dollar cost average on this S&P 500, and I'll be adding in a few €100 into this tonight or even tomorrow. We then went on to the growth portfolio, and I stated that I'll be adding 4 further companies into this portfolio that are undecided yet to bring it up to 10 companies, which will further adjust the weightings also. And thirdly, I went and talked about my thought process behind cutting these 20 companies down to the top 10, and then because I have fully diversified my S&P 500 ETF, I will be investing about €500 more this evening, and I will make a full video tomorrow of what I actually went ahead and done. So with that being said, that brings the end to today's video. If you like this video, please smash the like button, and if you're new around here, please consider subscribing to this channel for more related videos. As I also stated at the beginning of this channel creation, that I wanted to get my portfolio to 100,000, that's the goal, within the next 2 to 3 years. So by putting in an extra €500, we'll be over the 3% mark towards that goal. So stick around and comment below if you have any ideas of companies that you think I should add in the growth sector, and what companies you think I should omit from my dividend portfolio. Thanks very much guys, and I'll see you all in the next video.